Okay, let's just dive straight into this because, frankly, this whole U.S.-China trade situation is becoming infuriating, it feels like. I don't know, total chaos. Welcome to the Deep Dive Report Show.
It's definitely stirred up a lot of commentary and, like you said, frustration. The apparent shifts in direction are, well, confusing for many.
Confusing is one word for it. Trump chickened out. That's literally what's trending on Chinese social media. A hashtag seen, 150 million times. The idea that the U.S. just folded after all that incredibly tough talk.
Right. And that perception really stems from the very high tariffs that were put in place before. Remember, those were framed as a really decisive, strong stance.
Exactly. We're talking 145% tariffs on some goods. The president himself said they basically stopped trade in its tracks. And now the Wall Street Journal is reporting the administration might just slash those tariffs, maybe by more than half. And this is before any real verifiable concessions from China. It feels like we're just giving away leverage. It's bizarre.
Well, the timing is certainly raising eyebrows. In trade talks, your opening position matters a lot. Offering big cuts up front, it potentially weakens the incentive for the other side to offer much in return.
It's like showing your entire hand in poker before anyone else bets. And the language, the complete change in tone from the president. It's night and day.
It really is.
We went from hearing how China was, ripping us off, how it was criminal, what past presidents allowed, to now hearing, we're going to be very nice, we're going to be very good to China. Seriously.
That shift in rhetoric is quite dramatic, yes. And in international relations words, that kind of signaling, it really matters. It suggests a potential major policy recalibration.
Let's just quickly remember some of that old rhetoric because the contrast is stark. We've been ripped off and taken advantage of by China for years. China obviously treats us very badly. China's an abuser. China is ripping off the United States for $1 trillion. Even China panicked.
That earlier language certainly painted a picture of an unfair relationship, justifying those tariffs as a necessary fix.
But now, who looks like they're panicking? The perception, especially over in China, seems to be that it's the U.S. blinking first. Considering tariff cuts without getting anything concrete back, China hasn't really had to give up anything, have they?
From Beijing's viewpoint, this could easily look like a win. No major public concessions from their side, but the possibility of significant tariff relief from the U.S., that's a favorable development for them.
And you see it reflected on their social media. People asking, today's Trump beat yesterday's Trump. What will tomorrow's Trump do? It just highlights the whiplash. Remember the promises?
Yeah.
No exemptions, no exceptions, no deal, no bending, no nothing.
That does raise serious questions about consistency and ultimately credibility on the world stage. When policy shifts so quickly, it creates uncertainty. Partners don't know what to expect.
Exactly. What do the words even mean anymore? Ken Griffin, the GOP donor, made this point about the U.S. being a global brand, a brand built on reliability, rule of law. He says this kind of stuff erodes that brand. Why would anyone trust U.S. commitments?
It's a powerful analogy.
Especially when you remember the claims of 90 deals in 90 days, which turned out to be mostly agreements to, agree to talk later.
Right. Trust and predictability are cornerstones of international dealings. Perceived inconsistency can definitely harm that reputation. And yeah, the gap between bold claims and actual concrete outcomes doesn't help build confidence.
Yet you still hear some loyalists trying to spin this as some kind of brilliant economic masterstroke. It's just hard to square with reality. What seems much more likely is political pain, pressure, specifically the markets.
Yes.
The president watches the stock market very closely, and this sudden softening on China, even the slightly different tone on Jerome Powell at the Fed, it seems to line up with, hitting that 100-day mark. But China, they haven't budged. Reports even suggest they're kind of mocking the U.S. position privately.
Markets are always a huge factor politically, and milestones like 100 days often bring a desire for positive headlines. But if the other side isn't moving, it does suggest the strategy, whatever it is, might not be achieving its intended effect.
So maybe the strategy now is just trying to lure China back to the table. But are there even confirmed high-level talks happening? The administration claims there are, but we haven't seen proof. The real driver seems to be fear about the economy. The tariffs starting to bite.
That Oval Office meeting you mentioned earlier with the CEOs.
Right. Walmart, Target, Lowe's, Home Depot, apparently they laid it out pretty starkly, warned about supply shocks, empty shelves by summer, rising prices. That seems to have actually gotten the president's attention.
That makes sense. Those are very tangible impacts. Empty shelves, higher prices. Those are things that hit average Americans directly. and can generate significant public backlash, very politically sensitive.
Totally. So the tone softens. But what does China do? We don't know. And offering cuts before they agree to anything, that just seems like a weak negotiating stance. We're already seeing the fallout, right? Shipments backed up, problems hitting businesses small and large. It's like you said, showing your cards way too early.
The supply chain disruptions are real, and they highlight how interconnected everything is. Costs go up, logistics get messy, and the market reflects that uncertainty. It dipped, bounced a bit on hope maybe, but there's no real deal yet.
Yet the market dropped from those February highs. There was a little bounce, sure, but it feels fragile, based more on, like, wishful thinking than solid news. And the big question is still, who pays for this? If prices go up because of this mess, it's going to be consumers, isn't it?
That's the primary concern, yes.
Plus, the communication within the administration seems messy. Like, different parts aren't quite in sync.
That lack of a unified message definitely adds to the confusion and volatility, which is a stark contrast to the message from the business world, which seems pretty unified in its concern.
Even Congressman Mike Lawler, who initially saw tariffs as maybe a short-term tool, is now voicing concern about the short-term pain. Investors are watching this and the whole situation with Fed Chair Powell very closely.
Both are major sources of uncertainty right now.
We saw that brief market lift when the tone softened on both fronts, but then it dipped again. Still nervous. CNN's Fear and Greed Index still says fear. We've lost ground in the market since February, since April.
It really highlights the anxiety out there.
Greg McBride at Bankrate basically said, look, a softer tone is nice, but we need action. We need details of an actual agreement to reduce the uncertainty. And this administration, let's be honest, has a history of pretty rapid U-turns, which just feeds the volatility.
That unpredictability makes long-term planning very challenging for businesses and investors.
Gene Sperling noted it too. The president rarely backs down completely, but the softened tone probably came because the stock market was reacting badly and economic forecasts were looking, well, less rosy. And look at the other signs. Consumer confidence is down, lower than after 9/11 or the financial crisis, and people expect inflation to go up.
Those are definitely worrying indicators. Falling confidence can hit spending, and rising inflation expectations, well, they can become a self-fulfilling prophecy.
So maybe the president is finally seeing the real world hit. Businesses pausing investment, tourism potentially down, job losses. We're even seeing these weird economic signals, almost like a developing country with unstable inflation, where people flee stocks, bonds, and the dollar all at once. It suggests a real lack of faith in basic economic policymaking.
That parallel is striking. It speaks to a potential erosion of fundamental confidence when you see flight from all major asset classes like that.
So, are we going to get serious policy or just stay on this constant roller coaster? The dominant story out there is that the president backed down, that he got played, and reportedly, he hates that narrative.
Perceptions matter immensely in politics and international affairs.
And if this erratic behavior continues, it just keeps chipping away at that U.S. brand. We talked about the reliability of the rule of law. You need some fundamental economic seriousness to calm things down.
Consistency and adherence to established norms are vital for global standing.
So back to that CEO meeting. Do we think that warning price hikes, empty shelves was the real turning point? It feels like it might have been. Maybe the prospect of visible consumer anger hitting his own base potentially forced a rethink.
It's plausible. Direct warnings about immediate visible consumer impact can be very persuasive, cutting through other political noise.
Jeff Zeleny reported it was likely a mix, the retailers' warnings, the shaky markets, advice from advisors. He called it a U-turn for our now, wisely adding that caveat because who knows what happens next week.
The situation remains fluid.
Remember the market chaos right after the president renewed his attacks on Powell? Just before that CEO meeting, maybe that was the breaking point. The CEOs came in, basically had to school him on Tariff Economics 101. Empty shelves. That's a powerful visual, almost like those gas line photos from the 70s.
Tangible images and analogies can definitely crystallize complex issues. The timing you mentioned does suggest a possible inflection point in the administration's thinking.
But still, crickets from China, publicly at least. And no confirmation of real talks. The market is being cautious for a reason. There's just not much trust there, is there? How can businesses plan with this constant back and forth on China, on the Fed?
That inconsistency makes rational planning incredibly difficult.
This volatility feels very much like a Trump effect, driven by his own statements and tweets. There were even reports they were trying to keep him from tweeting during market hours.
The market certainly reacts strongly to signals or perceived signals coming directly from the White House.
And you had the Treasury Secretary trying to calm things down. Seems the president does listen to him sometimes. Even Senate Republicans are getting anxious, wanting this resolved quickly to stabilize things for businesses, avoid more supply chain chaos.
Yes, the business community and their representatives in Congress are clearly looking for stability and predictability.
Because if this drags on, businesses might just sit on their hands, right? Pause investment, pause hiring. That's bad news for the economy. Do you think the White House feels backed into a corner? And how does the president react then?
Well, administrations are always aware of the political consequences of the economy. Whether they feel cornered is hard to say, but the pressure is certainly on. As for achieving 90 deals in 90 days, that was never realistic. A simple top-line agreement isn't the same as a real comprehensive trade deal.
Right. The details matter enormously. And it's interesting, even people like Lael Brainard, who worked in past Democratic and Republican administrations, agrees that challenging China's unfair trade practices is necessary. She pointed out the Obama administration put 100% tariffs on Chinese cars after a proper investigation. Targeted.
That highlights the difference in approach targeted actions based on findings versus broad sweeping tariffs followed by potential retreats.
And China's response has been pretty textbook, hasn't it? Tit-for-tat tariffs aimed at specific U.S. sectors, playing the long game, maybe waiting for the U.S. to concede more.
They've shown strategic patience, yes, targeting politically sensitive industries in the U.S. in retaliation.
And this whole thing is tangled up with the Federal Reserve, too.
Yes.
The president attacking Powell, then saying he never wanted to fire him. The market hates that uncertainty. It wants Fed independence.
Absolutely. Fed independence is seen as crucial for stable monetary policy and low inflation. Market reactions strongly support that.
Because the risk here is that tariffs push prices up, right? They could reignite inflation, which puts the Fed in a terrible spot. Do they cut rates to help a slowing economy but risk higher inflation, or hold steady and risk a deeper slowdown?
It's a classic policy dilemma, often referred to as stagflationary pressure, where you have slowing growth and rising prices simultaneously. Tariffs can certainly contribute to that kind of scenario.
So summing it up, it just feels like a chaotic, unpredictable mess right now, driven by, well, it's hard not to think ego and maybe short-term political calculations are playing a bigger role than sound economic strategy or long-term global standing.
It's undoubtedly a complex and rapidly moving situation with major consequences, both domestically and internationally.
Absolutely. Well, that's all the time we have for this deep dive. Make sure you keep following the Deep Dive Report show for our ongoing analysis. If you got something out of this discussion, please do like this video, hit subscribe, and definitely click that notification icon so you don't miss what's next. We'll catch you in the next breaking news story.